Using a bridge loan allows you to basically move from point A to point B,
Yeah.
cover all the stuff after you leave instead
Yeah.
of having to account for it. Sharing with real estate agents how to grill loan officers, this setting expectations, there's maybe.
And we all know rate is important, right? Because that is a part of the calculation, but is that the only thing? So, hey everybody, Sean here with the Renown Mortgage Podcast. How are you? I am excited about what we're going to talk about today. We're going to talk about something a little bit different. So as always, we are here with our founder, Justice Roberts. Justice, how you doing?
I'm doing great. Glad to be with you here today.
I'm bundled today. I'm a little bundled. Here we are. We are May 18th, if you're checking the date. And it's chilly here in Seattle. I know we always touch the weather, but I think it's a thing. I think people are, comment below. What's the weather like where you're watching? If you're watching this out of the Great Pacific Northwest, what is the weather like in your area? And if it's really hot and sunny, can we borrow some? That's all I'm asking right now. So
We've
just
got some sun that's heading our direction here in the next couple of days. So
that's the rumor anyway. That's
as
the rumor.
long as it holds on, the forecast doesn't always hold.
I have friends who are sending me pictures from Hawaii right now, and I'm just like, please, just stop. It's okay. I'm good. I'm good. So, hey, listen, we're going to talk about something this week that is a little bit unique when it comes to the market. We're going to talk about bridge loans. What exactly are bridge loans? So, if you are right now considering selling your home in this market, what does a bridge loan mean to you? If you're a real estate agent and you've kind of thought, how do I use bridge loans? We're going to have something for everyone today a little bit. So, Justice, first, why don't we just do kind of the low flyover? What exactly is a bridge loan?
So the short explanation of a bridge loan is it's a loan that's going to help you get into a new house before you've sold your current house. And where it's important to have a simple explanation like that, because they can actually get pretty complicated based on what structure makes the most sense. There are
Right.
multiple different ways to actually structure a specific bridge product.
Yeah.
I mean, there's probably like 4 or 5 that are on the short list of how it is that we structure things. And there are even different ways to structure it than even the most common 5, so to speak. So the easiest way to understand it is you get into a new house before you have to leave your old one, and we can leverage the fact that you have equity in your current existing house to help
Right.
for your new property.
Right. So let's talk about that from the advantage standpoint. As a seller who's looking to buy a new home, what are your advantages? What is the buyer experiencing from someone who is maybe doing a bridge loan? What are the advantages that someone who's going to go ahead and maybe consider this route? Why would it be advantageous to them?
So I mean, if you're referring to like why a seller would want to accept an offer from a buyer that's coming in with a bridge loan, it's really a lot of certainty given the fact that you're not having to wait for a home sale contingency.
Yeah.
That's a way to kind of leverage a quick closing, keep everything kind of together
Yeah.
with that. But from a buyer, like, why would they want to do that? I mean, there's a lot of conveniences as far as why you would want to use a bridge loan. I mean, definitely makes your offer more competitive, but
Absolutely.
also you don't have to move out of your house. You may not even need to list your property before it is that you leave. So if you've got kids, if you have a lot of stuff or projects or things that you want to get completed before, and it's going to be a whole lot easier with an empty house rather than with all your stuff in it and
Right.
living in it. Using a bridge loan allows you to basically move from point A to point B,
Yeah.
cover all the stuff after you leave instead
Yeah.
of having to account for it. And you can still do that from a non-contingent. So you're not going to have to
Yeah.
sell your house and complete that. I'd
Yeah.
say that those are the most common reasons why people do it. It makes the transitions a whole heck of a lot easier.
100%. It's the clean contract. So if you've got 2 contracts and you've got a house that is contingent, you've got a house that's not, but you're technically contingent. It's just that that's not information that this particular seller is going to need to know, because that's not going to bear on their transaction in any way, shape, or form. They're clean and clear. Comparing those two, all things considered, all offers being in the same neighborhood, the cleaner non-contingent contract is always going to get accepted. I mean, 99.99% of the time, because it just doesn't have that one hurdle in there that really does leave a seller feeling insecure about the process, accepting this offer. And they've now, their future plans are now hung up on someone's what if. What if it doesn't sell? What if it doesn't? Yeah. So it completely
As
eliminates.
well, and I will say even from a negotiating perspective, I think having the conversation with buyers, if you think about it, actually writing a cleaner contract allows you to push on other terms. You can push
Right.
on having closing costs included. You can push on having a price reduction if you
Right.
write a cleaner offer. If you're
Yeah.
writing an extended close or you're writing an offer with a contingency or all these other things you want to write into it, it
Yeah.
doesn't allow you as much leverage to be able to push on other parts of the contract. So
Yeah.
if you want to go in there and get the lowest price for the house, write a clean offer. And if you can do that
Yeah.
with a bridge loan, it's you're going to have a lot more leverage that way.
Perfect. Perfect. Hey, this was kind of a short one this week. Now, before we round out, are there any disadvantages or things that people should be cautious of when considering a bridge loan? Obviously, that's what we do. We want to consult our clients to make sure that they understand exactly what they're stepping into and coaching them through this process. Is there any concerns or things that just to watch out for when you're talking about a bridge loan?
I say for the average people that are considering a bridge loan, do I do a bridge loan? Do I not? We're looking and comparing those options. The most important thing to understand is the fact that you're doing two loans when you're doing a bridge loan. And so there are costs with a bridge loan that if you just do a straight transaction, you're not going to have. And I
Right.
think understanding and weighing the pros and cons. Hey, this costs me more money, but it gets me a lot more flexibility. I
Yeah.
have the ability to, write a really clean offer. I have the ability to move into this house and then figure out what I'm gonna do to get moved in afterwards. I mean, I had a client just 2 weeks ago that called me on a whim. I've been talking to them for the last 6 months, and they said, "Hey, like, I didn't think my dream house was gonna come up with. This is the house I wanna retire in. It's on the water. Everything's perfect, and I need to, like, move now." And their financials were not in place. We didn't have all that, but they have lots of equity in their house. Utilizing the bridge loan allowed us to secure pretty much a cash offer
Wow.
within about 2 days. That
Wow.
was
Okay.
completed, offer was accepted, and we're gonna be closing here in another week. After that's completed, they're gonna have 6 months, 6 to
To put
11
everything
months to be
together.
able to
Yeah. Yeah.
put all the rest of the details together. Their life wasn't prepared for the fact that their house came up, unannounced. They're like, "Oh, this is the one. This is where we're
Yeah.
gonna retire. This is where it is that
Yep.
we're gonna be." So, it obviously provided a solution. With that solution comes the fact that there's a cost that's tied to it. But
Yeah.
I just have a conversation understanding just the cost and benefit. What does
Yeah.
this actually get for you? What do you gain in this option? And sometimes, like, you're gonna negotiate off the purchase price, whatever your cost of closing were gonna be, so it all washes out and is like it's just an easier structure. But at the end of the day, understanding that there are multiple costs involved when you're doing two loans versus just one.
Amazing. Amazing. That's what it is. There's so many different options, so many different ways to get it done. That is why you want to make sure that you are in a great conversation with a great loan officer who will sit down with you and have a conversation about what your options are. Bridge loans. If you want to know anything more, don't hesitate to reach out or comment below. We'll reach out to you. But for right now, that is all we've got. So we will see you next week.